Welcome to Flip the Cap, the industry's premier podcast that delivers insurance insights with a twist. I'm your host, Kathryn Smith, and if you're a retail agent working with cannabis businesses, you don't want to miss this conversation. We're going to discuss everything you need to know about the current regulatory environment, emerging lines of coverage that all cannabis operations need, the biggest underwriting challenges driving the market today, and much more. Joining me today are two cannabis experts, Jencap's national practice leader for cannabis, Lee Woodruff, and Jim McErlean, Director of Business Development at Cannasure. Cannasure is one of the largest cannabis MGAs, and they exclusively grow and protect cannabis and hemp risks. They also happen to be one of Jencap's biggest partners in the cannabis space. Whether you're looking for fresh takes, deeper insights, or a competitive edge, you're in the right place. So Lee and Jim, let's kick things off by discussing the current state of the cannabis insurance industry. And I think it's going to be really interesting to see how your insights may differ, being on the carrier versus the broker side. So let's start with you, Lee. How would you define the cannabis market today?
Thanks, Kathryn. Yeah, in the new markets, we're still seeing a lot of growth, and there's still a lot of growth to be had. In the more mature markets, we're seeing a lot of, I would say, consolidation is the right word to use there. There's a lot of oversupply of product in many of these state markets, and that's really driving the cost and the price of product down. And it's putting a lot of pressure on the operators. They've built their businesses, expecting certain margins. And when those margins are being tightened, it's really, impacting their businesses, and it's having a trickle down effect into, things, decisions that they're making as far as, whether to purchase insurance coverage or whether to maybe cut back on some of the insurance coverages that they're purchasing. So we'll get into some of that.
Yeah, no doubt. Lee's right on the money there with the consolidation, and the margins really are non-existent. The continuation of the cannabis industry to be federally illegal has eliminated some of the business write-offs that the IRS code 280E, it's called, would allow. So the margins are just unfortunately non-existent. And while the consolidation is happening and the big are getting bigger, and it's requiring the small operators, the mom and pops as we call them, to sell out to get their investment back, it's not really helping the overall industry, and it is driving prices down. Maybe good for the consumer, but at a certain point you get a concern about quality of product if those margins are squeezed as tight as they seem to be. But more interesting on our side, looking at the cannabis insurance industry, with all this experience, maturity, newness in some marketplaces, while the marketplace has grown significantly in premium dollars, the capacity has maintained a very steady course, where you would think that limits would be higher, property capacity would be higher, coverages would be expanding. None of those things were really happening 10 years later. So that's one of the things that surprises me. But the underlying underpinnings of that is because the reinsurance market really does control the overall cannabis insurance industry. There's very few reinsurance players, and they all participate in all of the programs that we'll probably touch on before this Flip the Cap is over. But because of that restrictive lack of additional players in the reinsurance side, it's not allowing the insurance space to grow. So while we may be increasing premiums, we're not increasing coverages or property capacity and general liability / product liability capacity. So that's really a negative as far as I see it, but it's what we're constrained to.
We've seen a significant evolution in the risks associated with cannabis operations. As a cannabis expert, what are some of the coverage offerings that you deem critically important and may not always be thought of by a retailer who isn't doing this all day, every day?
Yeah, so I'll jump in here. I think the property and the casualty coverages and lines of business are obvious ones that retailers are going to know to look to place. One of the ones that I see a very low take rate and a huge exposure is product recall. Every operator in the space has some sort of recall exposure. And I think we've all seen, in the news, a lot of these states have had major recalls over the past, 2 years. It seems like every other month there's another, major recall. And in a
industry with a consumable product that is highly regulated and has pretty rigorous testing standards. I think product recall is an area where people are not really paying enough attention to it. The exposure for recall is very high, and there are markets that offer pretty good coverage for that exposure, and it's actually a pretty reasonable price when you consider the potential expenses and then obviously the liabilities are even higher. So that's an area that I think needs to get more attention from retailers. And I understand with the market the way it is, a lot of the cost cutting measures they're looking at, more coverages that are you know more optional. I would say that's what the operators are kind of looking to cut, but I think it's a big mistake.
Well said, Lee. And I'd like to see a push from the retailers and the wholesalers, honestly, to demand more of that coverage. Like, I'll give you a Cannasure example. Our product recall coverage is for reimbursement of expenses. And it's for voluntary recall. So an operator can say, oh my gosh, I know something is happening poorly with a batch, and they can go to the shelves and grab their product off the shelf. And that effort to have that perhaps done by a third party is a reimbursable expense on our coverage form. But it's not indemnifying the cannabis operator. So they're going to lose their entire profit margin or opportunity to make money. All they're getting is an expense reimbursement. So I'd love to see a push to make us as markets require our reinsurance partners to expand that coverage, because I do think it's important, and it's getting beyond 2 or 3 states. We've seen probably recall conversations in 5 or 6 states now, and that conversation is going to continue to explode over multiple states. So I think that's a big one. Assault and battery coverage is a coverage I don't believe is taken up as often as it should be, especially in the dispensaries or the retail space. That's a coverage available from most of us insurance providers that is only taken up on maybe 15% of the risks. And that's a surprise, because we know from a claims conversation, which I know we'll have later in the Flip the Cap today, will be claims activity, but it's thefts and vandalisms, and that often can be right in front of an employee. And when that happens, the assault and battery from that third party is a legitimate coverage concern and not being taken up. That's available, surprisingly. Another push I'd love to see from the retail and brokerage community is to demand more off-site power surge protection coverages. It's a very standard market coverage available, and it's not being offered for the most part from all of us cannabis insurance providers. Obviously, part of that is because of the excess and surplus markets approach that we take. But I think there's an opportunity to have a swell, the rising tide raises all boats. If there was a bigger conversation coming from the community to say, we believe that coverage is necessary because here's the claims that aren't getting paid, I think that would be a fascinating case study to how to improve an insurance offering.
Yeah, and I agree with you totally there, Jim. As a broker, I'm getting a lot of requests for utility service, off premise utility service damage, and you're right, it's not available. I have seen some very small sublimits that can be added for really large accounts, but we're talking like a $25,000 sublimit.
Yeah.
That's just not going to be enough. So yeah, that is an area that I would love to see some development.
What about EPLI?
Yeah, I'd say EPLI coverage. I mean, it's, for dispensaries, I think a lot of them are starting to purchase it from what I'm seeing. I don't think everybody is, and every one of these operators has a major exposure there. So that's another line of coverage that I think is super important. And I mean, honestly, one, wrongful termination claim or lawsuit can really, do some damage to your bottom line. So, a lot of times it's, you're purchasing it really for the defense coverage more than anything. It's just like a prepaid expense that you're purchasing. So yeah, that's another line of business that probably doesn't have a high enough take rate for what it should.
Kathryn, great question. And as you think about coverages outside of a package offering, that's a top one in my book as well. But how about cyber? We've started to see cyber claims happen. So there are clearly some cyber exposures that operators have. And think about it this way. Not only do you have dispensaries on the cannabis side, but there's also in our related world, there's the hemp and CBD operators that are transacting business interstate because they can. The Farm Bill of 2018, I believe is the last one, allows these operations to be completely outside the regulatory environment of THC cannabis risks. So they're transacting business over the internet and collecting and data from clients and customers, and gosh knows that those have been breached. So the fact that cyber is a legitimate exposure, where's the coverage take up?
I'm curious how the cannabis regulatory environment of a particular state dictates your ability to place insurance coverage for a given risk. It's literally a moving landscape. I don't know how you all keep up, either on the carrier side or the broker side, but talk about the regulatory environment a little bit and its impact on your ability to cover these risks.
I'd love to start with that one because that is the tenet of our underwriting approach. As we look at any one state, that's exactly the first thing we look at is the regulatory environment. So if I look at the state of Massachusetts and then compare that with the state of Oklahoma, I would see two very completely different regulatory environments. And I'd want to put more insurance offering or therefore insurance risk at risk in a Massachusetts because of the tight regulatory environment versus in Oklahoma, where we believe it's that old Wild West conversation and therefore not as tightly regulated. So it's a lot easier for any one operator to earn a license and start to operate a business. Our concerns are when you look at any one industry and therefore state as a brand new venture, how do you underwrite a brand new venture? Because you don't know the management, you don't know, you could see projected sales, you could see projected limits of property coverages and things, but you don't know why that risk would be better. And we rely upon the regulatory environment to get us there. So we almost ignore the fact that they're a new venture and we go straight to the regulatory environment that they're going to launch that business. And if we believe that regulatory environment is strong and therefore potentially protective of us as a risk bearer, we're almost betting the farm on the fact that it took that operator a lot of energy and financial support and business planning and proper hiring procedures and all those underwriting things that you dig into. That regulatory environment could actually be your underwriting box. And if you believe that box is tight, you're going to want to run as many new businesses in that state as you can. And when that underwriting box is deemed loose or isn't as firm, if you will, then you're going to be concerned about that next risk that you underwrite. And you might not choose to write that account in a certain state.
What about you, Lee? I know a huge reason why retailers leverage a wholesale broker like Jencap is because they're counting on your expertise to know all of the various different nuances state by state. And they are so nuanced that you truly need someone who does this all day, every day. But how do you navigate it?
Yeah, so at Jencap, our cannabis division, like all we work on is cannabis risks. We are not generalists in any sense of the word. All I work on all day is cannabis risks, throughout the country. We have a few people spread out throughout the country that kind of have a better sense of the regulatory environment in those particular areas. I'm actually sitting in Michigan. Michigan has some pretty unique, requirements from an insurance standpoint and financial responsibility coverages for license compliance. And with that, like we understand, and we've actually helped some of our carriers, develop products that will meet the guidelines set by the CRA. So as a broker that specializes in cannabis, we know exactly what carriers to go to meet those requirements and which ones won't meet requirements. So that's really, kind of our advantage is that, that's all we work on. So I don't really have, I don't have to worry about a construction account. I'm just looking at, cannabis risks all day and know exactly where we need to go depending on the requirement of the state.
I work very closely with Lee on a national basis, and I'll give you a great example of something that tags right along to that is we're having new conversations together in the state of Minnesota. So that's a brand new state. It's launching its adult use laws, regulatory environment as we speak. and issuing the first set of licenses as we speak. And so when I look at that state, I look to Jencap and specifically Lee and say, I believe this is a good state from what we see, but what retailers do we want to work with and why? And so we get a chance to dovetail on those conversations. So we get the strength and the experience of Jencap from a distribution standpoint, while we both work together in understanding that Minnesota regulatory environment. So for us, we look at that next new state as a really cool partnership between Cannasure and Jencap. And we've had very much the same success already in the states of New Jersey and New York as we speak with both Lee and Justin Sheeran, who have really helped us in the environmental landscape and the distribution landscape in those two states.
What's your most educated guess on, if we're looking 2-3 years down the road, what's the regulatory environment in cannabis look like? Is it still going to be medical only here, recreation? Like, do you think it's just going to be a broader map of consistency, or are we still going to have this onesie twosie?
Lee, what do you think?
Yeah, I think 2 to 3 years it's not going to look much different. I mean, I think there's still a handful of states, Florida being one on the rec side. There's still a handful of states that I think will jump into the game, but I don't think in 2 or 3 years we're really going to see anything from a federal level. Maybe a little bit of, potentially some safe banking, but I don't think it's going to look much different in the near future.
Yeah, I'd agree. We just saw a news release today that I don't even know what you call it, the Commerce of Cannabis Conference, which is supposed to be underneath the current presidential administration, which we know obviously Republicans have historically not been very supportive of cannabis. Democrats have been. But right now, you're looking at a cannabis conversation that's not taking place federally. And that's now been, let's just say 6 years or maybe 5 years when you're talking from the Democratic environment to now the Republican environment, not having discussions whatsoever on cannabis on a federally legal perspective, and even supporting the bank conversation. So it's really tough.
Jim, I want to go back to a conversation that we were having earlier, because you really do have a unique perspective being on the carrier side. I'm curious what the biggest underwriting challenges are for Cannasure being in such a unique space like cannabis.
The reinsurance support of this industry has been fantastic and limiting at the same time. So the reinsurers, allow us to operate in the capacity that we do. But that capacity, as I mentioned, doesn't increase in a limits perspective on both the property and the liability side. So they're kind of keeping us at bay in terms of coverage growth, limits growth, and then kind of pricing. So pricing, when you think about it, they're expecting the future claims conversations to happen, especially in the product liability standpoint. So we're getting some pushback on pricing overall to the book of business, regardless of loss experience, because there's still a great unknown relative to our overall, what is 3 years down the road, 10 years down the road going to look like. So that's one of our main underwriting challenges, because the underwriters want to do certain things here at Cannasure, but might be, constricted by the reinsurance support that we receive. Again, good problem, bad problem. But what about the CBD space? I spoke to the Farm Bill a little bit. The CBD hemp product world is growing rapidly, and you're seeing some states trying to restrict those industries because the cannabis industry is doing so well. So there's a big conflict. I mean, it's really a fight between industry segments, and we're not terribly comfortable with the regulatory environment of the CBD hemp space because it's not as tight and strong as the cannabis. So as an underwriter, we're challenged by looking at those next grouping of accounts in the CBD hemp space. Lee and I have had this conversation a number of times specific to the state of Minnesota, and then you got Tennessee and Kentucky, Texas, the Carolinas, Indiana, Iowa. I mean, there's a whole bunch of states that aren't even having cannabis conversations, that are going crazy on CBD hemp, and yet we're not really being able to help those industries from an insurance standpoint because we don't trust the regulatory environment. And then you got a whole nother product line in Kratom. Like we're completely hands off on Kratom, but we receive a question a week on what's the next Kratom coverage opportunity. And it's surely not coming from Cannasure, but those are some areas in the space that we get challenged on and sometimes don't have a good answer.
That is interesting of like, we're not willing to be cannabis. We'll be completely cannabis adjacent.
Yeah.
And it's
Yeah.
not as regulated, which is the irony. But yeah, that's a whole separate thing. What about for you, Lee? Are there any specific cannabis risks or coverages that you have a hard time finding placement for in this market?
Over a year ago, I would say the intoxicating hemp space was a little bit more of a challenge. I mean, there was still a handful of markets, and I think more people are getting on board, more carriers are getting on board with insuring, say your hemp derived, intoxicating hemp derived beverages, for instance. There's a number of markets now that are looking at those. Um, so I wouldn't, that's not really an issue anymore, but it is, like as Jim was saying, we don't know what the long-term, regulatory environment is going to look like, on a state level, but also on a, potential federal, oversight over that industry. Because it is a loophole. I mean, it wasn't intended, the Farm Bill was not intended to allow these intoxicating hemp products to be out in the marketplace. So it is a loophole, and that can always present challenges, when you're trying to prognosticate the future of that environment.
So a question that we always discuss when we're digging into a particular line of coverage and or industry, in this case being the cannabis industry, our retailers find it really useful to hear from us because we see such a broad distribution of risks coming to us at Jencap in this space. But what are gaps that you see in general when you're looking at these applications? And there are a lot of agents out there that don't do cannabis regularly, and they want to put it with one of their markets for commission purposes to, feed their direct markets, whatever it is.
Mhm.
And they might miss something. What are those things that you regularly see getting missed?
Yeah, so as a wholesale broker, I think competitive advantage over retail agents that maybe have one or two direct relationships with a MGA program like Cannasure or another one. Jencap, we work with pretty much every MGA program, and we also work with all of the brokerage markets out there in the industry. So the advantage we have is that we have a better sense of what every market is doing when it comes to terms and conditions within the policy itself. So like, for example, we see, when we're looking at risks, like the first thing we'll look at on a policy, or one of the first things on a property policy, for instance, is, what does the wind hail deductible look like? Wind or hail storm deductibles, generally in this industry are, percentage based. So you're looking at a percentage of the total insured value is what your deductible would be. So in some cases, we might see, a 2% wind hail deductible. That's pretty standard for somewhere in the Midwest, like Michigan. But then you may look into the more detail, and you might see a minimum wind hail deductible of $250,000. So if the TIV on that risk is lower, you look and you see 2%, that's fine. But then you see a minimum of 250,000, that can be problematic. And a lot of people don't necessarily understand what that means, or they don't communicate that to their insured, and that can become a big issue. If there's a windstorm or a hailstorm that comes through and it damages your building, you might have a massive deductible and not really see the claim payout that you're expecting. And then the same thing with on the property side, named storm is another major area of concern. So a lot of the markets, if you're right in on the East Coast, you may see named storm exclusions entirely, and that's fine as long as it's communicated to the insured and they accept that. But I think a lot of times it's not even it's not a coastal risk necessarily, but you'll see a named storm exclusion in the policy, and the named storm, you might still have some damage to your building, or contents, as a result of a named storm, and now you have no coverage. Or you'll see higher deductibles, things that are related to that. So that's like one major area on the property side. Another thing on the property side, I would say, is business income. So a lot of times we're seeing inadequate limits on the business income side. These businesses are either growing or they're failing. There's really not, if you're staying kind of the same every year in sales, that's not a good thing. So a lot of these are growing businesses. And if their business income limits are not increasing, year over year, that's a huge exposure. And then also these are, businesses their sales may fluctuate. A lot of these are, newer businesses in some of the new states. They might have major increases in sales or blow through their forecasted sales. So a lot of times we're looking at, do they have co-insurance on their business income, or are they using a monthly limitation where we can get rid of the co-insurance clause, which I think is really important for these newer ones that may potentially, blow through their forecasted sales.
Yeah, you stole my thunder on that business income, business interruption. I think that is underutilized. I think a coverage gap, Kathryn, is as simple as it sounds. Theft is a problem in our industry. It's a leading driver of claims activity. But the problem in our cannabis space is that there's too many retailers that are checking boxes on an application, and there are multiple applications used in our industry. Cannasure has one, our competitors each have their own, and they're checking a box saying, yes, this company has this kind of security system, this kind of vault, this kind of safe, this kind of camera system, whatever the cases may be. And yet when the claim happens, it turns out that that wasn't true. And it's a educational issue. It's not meant to be, in my opinion, a misrepresentation. I think it's just lack of education to an area that's brand new to a lot of us. We were all neophytes in the cannabis space at a certain point. And the problem is on the next new state or the next new agent that jumps into our space, and they say, of course they've got central station burglar alarm, of course they've got this, and of course they've got that. And then the claim happens, and then now it is a coverage gap because you're seeing claims denials from all of us. It's not just a Cannasure problem. It's not our competitor's problem. It's an industry problem because claims are being denied because the adjusters are going out there finding that they didn't have this, and this at the security level that they said they did on the application. So the coverage gap is being created in the application process.
And that's another thing Jencap will help with. So like we'll typically review the safeguards on the current policy when they submit it to us. And then we'll kind of compare that to what the application that was submitted shows. So we find that a lot of times where, hey, you said, or on the policy, you have a safeguard for central station fire alarm, but the application you submitted shows that they don't have one. Let's dig in here. And a lot of times we find out that, yeah, for the past 3 years, you've had a policy with a safeguard requiring that, and you didn't have it. And you're lucky you didn't have a fire loss where the alarm didn't go off. Let's get that corrected moving forward. And we'll just share that with the new market or whoever we're working with and make sure that they remove that. Or if they're going to require it, that we get that installed and activated.
Yeah, you can't move too quickly through a process thinking that they're just benign questions because they're not.
Yeah, and I don't think people put enough importance on that. Like that is a significant exposure, not only for the insured, but for the agent. It's a huge E&O exposure. And I don't think it really gets enough attention. And I would love if that, started to get the attention it deserves.
Well, and Kathryn, to Lee's point, that's the reason why agents should work with Jencap and Lee and Justin specifically, because they know this is an area of claims concern where the rubber meets the road. The whole reason why we're offering insurance is to pay a claim at a certain point. It's not to have a claim denial. Now,
Yeah.
Lee and I have, I would say, an every other week conversation relative to claims activity. And as far as I remember, I don't know of any claim denial that we've had on Lee's book. So it shows the
We'll pay you
depth
later,
of his
Jim. Good job.
expertise. Oh,
Not gonna work.
Just kidding.
hey. But it's important that the coverage that's being sold is the coverage that triggers. And when a claim does occur, you want to be there saying, well, we did ask that question the right way, and we answered it the right way. So the coverage was able to trigger and the policy came forward. It didn't hold up a big stop sign saying, nope, claim denial. So that's something that really helps when you know what you're talking about. And that's why you need expertise out there.
Well, look, we're almost out of time, but I would love for you both to answer one last question, and whoever wants to go first is fine. But if you could give a retail agent working on a cannabis deal one piece of advice, just one, what would it be and why?
My advice is to make sure that you are approaching multiple markets to make sure that you're getting your client the best terms and conditions and pricing. Or make sure that you're at least approaching a wholesale broker to kind of make sure, if you're a retail agent and you submit to one market, I would make sure that you're also at least having a conversation with a wholesale broker about the market that you plan to approach direct and whether or not we could potentially find better terms, conditions, pricing through other markets. Sometimes the market you're approaching directly, that might be the best market for it, and we're happy to tell you that. But a lot of times, it's, there's other options out there that, the insured should make a decision whether that's the market they want to use. And we're happy to give you options to present. And we understand, we're not going to win every single account, but we would love to, help protect your insureds and make sure that all the options are presented to them. And I think working with a wholesaler, we have a better understanding of, the marketplace in general and in specific areas of the country where some of these programs maybe, have success versus other areas. So working with a wholesale broker that specializes in cannabis, I would say is very important, and really just dive into the cannabis industry. If you're writing cannabis risks, it's not a generalist game. I think you really need to focus your attention on that industry. And the great thing is that it's the industry as a whole, you're going to get a ton of referrals. If you do right by one of your cannabis clients, they know, they all talk and they all give referrals. So it's, it casts a wide net.
With some multi-pronged pieces to the answer I'm going to give you, it's to thoroughly understand the account you're talking to. And that means you're creating a thorough submission. You're understanding all the exposures. You're understanding who the incumbent carrier is. You're understanding the coverage restrictions that carrier might have in place. You're understanding the competitive environment. You're understanding what it's going to take to win the account. And you're understanding what value you bring as that new retail agent to that client. So if you can understand all of those things, you're going to present a much better submission to Lee and Jencap. And if they work directly, which is becoming less and less a reality because they understand they need help at the education level in the cannabis space. So once that understanding happens, and as they pivot to Lee and understand what they don't know and ask better questions to understand that risk, then they can offer much better advice at the risk management level. And I would tell you that way too many submissions come in where you ask very simple questions to that retailer and they don't have the answer. They don't know why they're trying to win the account except for lowering price. They don't know why they're having a conversation in the first place, because maybe the client has had a claim and they weren't honest about the pain point or the issue that propped up. They may see the loss run, but they might not understand the underlying reasons why. Is it because they have high pressure sodium lights and they had a fire claim and no one's having a conversation on how to mitigate that? So it's the full in-depth understanding of the risk is how I would answer your question.
Those are all great answers. And we could sit here and talk about this forever. Unfortunately, that's all the time that we have today. So thank you all so much for tuning in to Flip the Cap, the industry's premier podcast that delivers insurance insights with a twist. We'll see you next time. Cheers.